I think this is what we see as much as anything on business divorce cases when there is a significant disagreement, at least from my experience, is going to be self-enrichment. And this could be by any member of ownership or the controlling or the manager of the company. And this is just a handful of the items. And we've seen all of these and we've seen several others. Um, One of the easiest ones is paying excessive compensation to those in control or parties related to those in control. So, doing an analysis of payroll and of distributions of any type of cash that's going to owners or the owners related entities, is that all backed up by employment agreements, compensation agreements, bonus agreements? We'll see ongoing payments of compensation, but then we see a lot of one-time lump sum payments that can be explained. Oh, that's a bonus. Well, does the company's performance dictate that level of bonus? Again, related parties. So they'll hire family members or they'll maybe sometimes it's on paper only. Is that family member actually providing any services to the company? And if they are providing services to the company, are their level of services commensurate with their compensation? Because you might be, oh, they stop in every once in a while. They've got an email address, they've got an office, maybe don't have an office, they've got a few links to the company, but are they really doing anything? Are they driving any value? Are they providing services that you would otherwise have to contract out to someone else for if they're doing accounting work or what have you? So it's looking into that. So misuse of company resources and assets. So using the company property for another business. We've seen that before where someone is running a business out of a business that the shareholder who's not really involved doesn't even know about. Um, you know, Company cars or company, maybe it's a plane and the plane's really just used for, for personal travel and recreation purposes, and very little of it is related to business purposes. Misappropriating and diverting corporate funds. I mentioned that a little bit earlier. It could be a top line revenue diversion. It can be adding a whole bunch of expenses, baking expenses into the company to minimize profit and minimize what you'd have to share with your partner by putting in personal expenses. And that can be anywhere from we've seen this where a company's actually booked a branch office and it's a relative. It was actually a child's home, and so they renovated the child's home and they put that on as branch capital expenditure and things of that nature. And it was ultimately by digging into the supporting documents where they weren't clear because they had invoices that appeared to show renovations, but a couple of the service addresses or delivery addresses ended up not being the claimed doctored actual business location, but was actually the child's home address. And so by simply Googling that location and seeing that, you raise revenue anyway. So there's just things of that nature why sometimes when you dig all the way down to the documents. Now, if the documents are perfectly manipulated and doctored, then you wouldn't necessarily see that. But, people don't always cover their tracks perfectly. Um, Paying personal expenses. Okay, we mentioned that, but that could also be credit cards. That's as big as any of the things I think we find, and that's just a whole lot of small expenses. So, utilities and gas and clothing and entertainment and travel, all of that, just running your personal credit card through the business, um, and then engaging in related party transactions. Again, we mentioned that. Another example we've had is where someone has gone out and bought the real estate for the location that they knew they were going to expand to with another location of the business. And what did they do? The related party went out and bought the land and then resold it to the business at a much inflated price. So by looking at what was the purchase price of that land versus kind of what land was going for in that general area on a location basis, you could see that there was an overinflated price that was being paid.
Yeah, I definitely think related party transactions have really gotten a lot worse in the last 15, 20 years because a lot of companies nowadays have complex legal structuring. And so you'll see in a lot of industries where they have several, the corporate umbrella has got a lot of companies part of it. And so this has become a much bigger deal. In certain industries like in, real estate, they have a lot of legal entities and other things that are done from tax purposes and stuff as well. So you see a lot more a lot of related party transactions nowadays.